Good afternoon, everybody. It's Thursday, July the 6th, and today we're going to talk about the Magnificent Seven. So what are the Magnificent Seven? Well, these are some of the largest companies in the entire world. You're talking Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA, Tesla. These seven stocks have really dominated the S&P 500 this year. Last year was a tough year for all these companies. 2022, as it was for most of the market, was rough. For these companies, even rougher. A lot of these names were down 65% at one point during the year. But this year has been a very different situation. These stocks have run so far so fast that by some measures, about 75% of the returns in the US markets overall are attributed to these seven stocks. You're seeing money just piling into these seven different names. And to give you an idea what it's meant for the return of the indexes, as of the close yesterday, Dow up about 4% for the year, not bad. Equal weighted S&P 500. So if equal weight, what I mean by that is you have 500 companies in the S&P 500, give or take. If you broke those into equal pieces, basically equal weights, that's up about 5% this year. But the cap weighted index, this is the S&P 500 index that takes into account the size of these companies, is up about 14% as of yesterday, so far year to date. And a lot of that is attributed to these seven stocks. So where do we go from here with that? I think that, the first half of the year, the crowded trade, which I talked about 6-7 months ago, which I thought was cash at that point, and it definitely was, has shifted now. It has moved into these seven stocks, and there's money pouring into these names. Usually these crowded trades do not sustain themselves. If you go back to, say, the pandemic era, think of the Zooms, think of a lot of this, the Shopifys, a lot of these sort of innovative tech companies that in the year 2020 absolutely went on a tear. That is pretty much reverse course, and without exception, a lot of these companies are trading at levels lower than they were back in 2019 before COVID even hit. When I see, however, companies that are this big, these massive companies, this Magnificent Seven, comprise such a large part of the index, it wouldn't be unusual at this point if you started to see a little bit of rotation. Now, full disclosure, we own some of these stocks. We've owned many of them for years and years. We're definitely underweight the index, and we're underweight probably what some other portfolio managers would have relative to the size of these companies. But they're definitely, you got to take a look at this now, because the crowded trade has become essentially really concentrated in these seven names. We've never had a point in history where you've had seven companies, seven stocks, comprise such a large percentage of the S&P 500 as we do today. So it bears some watching, particularly when you consider that tech stocks tend to not do that great in a rising rate environment. And today we just had a spectacular jobs number that came out. It basically means the Federal Reserve is going to have one or two more rate hikes in their future. I think this idea that people had that the Fed was going to pause and possibly even cut, that probably could happen a lot later than I think that some people had hoped for. So this Magnificent Seven, these seven stocks, we definitely got to keep watching them. Will they be as magnificent in the second half of the year? That's tough to say. Stay tuned. We'll try to figure it out. But I would exercise, if anyone's looking at those Magnificent Seven stocks, those names that we mentioned, you should probably exercise some caution, because valuation at some point definitely comes into play. You stay with me today for 3.5 minutes. I really appreciate it. If you have any comments, please comment below. We'd love to hear them. And otherwise, stay tuned, and we will come back again soon.